Hi everyone, welcome back to L-Dubs Investing. We're on this channel, we talk all things cryptocurrency and investing and of course stock market. In this video, we're talking about a digital currency in England, and we are also talking about what price action is happening in the markets and also what is Joe Biden doing with taxation. Stay tuned. Welcome back to the channel, everyone. If you're new, welcome to the channel. And if you're not, thanks for dropping back in. If you like this content, please do not forget to like and subscribe and share. Let's jump straight in. Looking at the overall market, as you can see, we're in the deep dark green in cryptocurrency. Bitcoin 7.56% up at 58,187. Ethereum almost at 3,000 at 2,842. Looks like XRP strong dark green at $1.60. Doge is back at it again at 12, almost just under 13% up. Obviously, we've got some very altcoins in the very dark green, so it looks like we are heading up and onwards to new all-time highs. On to the next one. Alrighty, jumping straight in. Bitcoin hits 57 in surprise surge to almost erase the April BTC price crash. A crazy few hours see volatile returns with spot buyers noticeably in charge over leveraged trades. BTC retook 57,000 on April 30th at a surprise bullish end to the month took traders by surprise. 4.2 billion expiry gives away to big Bitcoin gains. Data from Cointelegraph show BTC climbed 5% in hours on Friday to come within inches of the green monthly close for April. At press time, 57,000 still formed a focus, with the pair needing to clinch 58.80 to avoid April's monthly candle going red. On social media, traders point to the month's 4.2 billion option expiry being out of the way and thus allowing Bitcoin room to move. On Cointelegraph often reports expiry events trend to pressure Bitcoin beforehand, but post-factum relief rallies differ considerably in strength, sometimes not appearing at all. The compression of market on day was cause for momentum. This Bitcoin price surge is driven by spot pricing. Funding even decreased a bit, he noted. Referring to funding rates on exchanges with decreased implementation, the short positions are paying longs in a classic sign that upward momentum could continue. Spot buyer demand likewise signals that BTC is being bought within leverage, which transactions to a more organic shift of real coins to private wallets. Just days ago, Bitcoin was on its way, sealing its biggest April losses since 2015, in a stark contrast to the general trend of the last 12 years. Obviously, we're upwards and upwards. I think we're going to have a great month in May. Let's have a look. On to the next one. All right, England central bank moves ahead with CBDC with 7 job postings. The United Kingdom Central Bank, the Bank of England, or BOE, still maintains that it is unsure on a path forward regarding a central bank digital currency, although the entry is looking to hire at least 7 CBDC-related job postings. The job listing recently surfaced on BOE's job posting website. One such position searches for a stakeholder analyst for central bank digital currencies. As per the site, the bank is also searching for a project analyst, a solution architect, a technician analyst, and a senior manager and a senior enterprise architect, all CBDC related, as well as the senior CBDC policy analyst. The site posts the listing on Tuesday and Wednesday. Like many other central banks, the Bank of England is actively exploring whether it should develop and issue central bank currencies, CBDCs, said the page for the stakeholder analyst job listing. No decision has yet been taken on whether or not the CBDC needed in the UK, but it is an important topic for the bank to understand. The posting mentioned a number of specific on the job, as well as BOE's focused in terms of looking into central bank digital currencies. Reporting earlier this month shows the Treasury is jointly working with CBDC-related research, unveiling a CBDC task force. CBDCs have been a hot topic over the past year or so within central bank acting varied speeds. All about adoption. England is well and truly on its way. On to the next one. Jumping straight in, Joe Biden gains tax plan to pull crypto down to earth from the moon. More taxes may increase short-term volatility, but long-term you may see demand for DeFi applications and other collateralized use cases. These are often multiple cases for an asset's sharp decline, but Bitcoin's 10% nosedive, which took place in April, may be blamed on the Biden administration's report plan to tax crypto gains at double the current rate on America's wealthiest. Bitcoin is habitable volatile, so one probably shouldn't reel too much into a double-digit swarm in any given week. But this might be a good place as to often reflect on the possible impacts of the United States capital gains tax and tax in general upon the growth of cryptocurrency and blockchain technology. Could it hinder long-term adoption? If so, in what way? Will Biden plan even reach fruition given the veins of the policy? How does one explain the mini market eruption in the face of more possible or more taxes in a single nation? What sort of misconceptions might be harboring with regular to crypto taxation generally? The price drop can probably be attributed to a number of factors and rumors. The month-end expiring future positions, which resulted in liquidations of positions that triggered a slide. Marcus and his partner audit practice, a Grant Thornton LLP and leaders of the firm asset price practice told Telegraph. There was also reports generally thought to be false. The Treasury Secretary Janet Yellen was spearheaded an effort to improve an 80% capital gains tax rate on cryptocurrencies, as well as rumored that the US Treasury was investigating financial institutions for illicit use of cryptocurrency, which the Department of Justice would do. Not the Treasury added, vote continue. There will be also committees around a drop in Chinese mining capacity. David Turner, investment of new contracts, downplayed the BTC price, stating 10% volatility is nothing new for Bitcoin prices in general. Meanwhile, the CPA and doctor student in accounting of university law noted, while the tax news docs coincide with the drop, it may also be one many contributing factors. But taxes do matter. The Biden proposal would put the efficient tax rate above 50% in certain states and would be determined to job creation. Co-founder of Bitcoin Capital in Miami told networks, adding, and would continue to accelerate the move from states like California and New York to more tax-friendly states like Florida and Texas that have no state income tax. There is also an early stage in the administration, of course, and there is some question whether a double of taxation and capital gains to the wealthiest to 39.6%, as proposed, will even make it through Congress. That will eventually be reduced. Someone needs to pay for all the stimulus, deficits, and national debt, so very likely you would see a tax increase in the near future, whether on capital gains tax or something else to be decided. However, proposed law in University of California Erin School of Law said that the proposal will likely be accepted in the current form. The Democratic majority in Congress is just too narrow for this, Martin informed everyone. Said the numbers being proposed at the junction will unlikely pass the Senate in the current form, and Senate Democrats will back the tutoring numbers. As a result, it's not clear whether the proposed changes would significantly affect most cryptocurrency holders. Would it affect you if you went to a 39% tax instead of long-term capital gains of around 10 to 15%? If it was doubled, would it affect you? Let me know in the comments. Taxes likely do have an effect in Bitcoin price segment, continuing as we have a lot of prior research on a wide variety of outcomes as aspects of life that are affected by tax rates, especially in the financial sector. Moreover, they could push crypto and blockchain technology in some interesting directions. Wiley, for example, would expect to see more short-term volatility due to certain investors cashing out at lower rates. But long-term, you may see more demand for DeFi applications and other collateralized use cases to create liquidity, avoiding trigger gains. What about rumors surrounding Yellen's so-called 80% capital gains tax, which would be pinnacle to unprecedented, Goldman told Cointelegraph. I do not believe there is a strong merit to rumor of an 80% capital gains tax on cryptocurrency. A position echoed elsewhere, but some still that Yellen hasn't really warmed to yet. My own view is Yellen fundamentally doesn't get Bitcoin, Weston said. Continued and go after digital assets to protect against criminal activity is an asset that leaves a record is odd, particularly because cash is usually favored in such transactions given it is untraceable. they say. I think Janet Yellen was looking to minimize the speculative in crypto. She believes that rampant speculation, like what we see in crypto, is not healthy for investors or the underlying asset over time. What do you guys think? Come and check out the article on Cointelegraph, guys. A lot to go through here. What do you think of the tax? Would a 40% capital gains tax affect you? Let me know. On to the next one. Hey everyone, thanks for sticking around. If you like this content and you want to see more on cryptocurrency and stocks and investing, please do not forget to like and subscribe. If you're after some free Bitcoin, please check out the pinned comment to Coinbase to get yourself some free Bitcoin. If you'd like a free stock, please make sure you use the referral link to Stake to get yourself a free stock. See you next time.